Let's start. Okay then. Dear Chairman, Mr. Metin Özdemir, dear esteemed members of ADFIMI, and dear all participants. For those of you whom I haven't met yet, my name is Fatih Serdar Celik, the Deputy Secretary General of ADFIMI. Welcome to our webinar on the topic of impact investing and sustainable finance after COVID-19, challenges and opportunities for development institutions. As you know, the topic of our webinar is very crucial in the view of current developments which shape our global financial ecosystem. Before leaving the floor to Professor Dr. Ahmet Faruk Aysan, who will be the moderator of this webinar today, I wish this event will be a successful opportunity for industry professionals to come together and to share their know-how, thoughts, and contribute to the development of our society. As ADFIMI, with nearly 40 members from 18 different countries, it is our goal to evolve into the leading networking platform to support the activities of development finance institutions in the Islamic world. And also organizing webinars such as this one is very critical for this objective, especially in the current time of limited mobility because of COVID-19 travel restrictions, as you know. Once again, I would like to repeat my heartfelt appreciation to all those who have participated in making this webinar possible. And I would now like to pass the word to our moderator, Mr. Aysan, to inaugurate this event. Mr. Aysan.
Thank you, Fatih Bey. It's great to be moderating this session with the distinguished panelists. And also thank you for giving me such an opportunity. We follow the activities of ADFIMI in the past, and I'm sure this webinars will be an added value, and we will learn the new ways of handling the conferences, events, and we will be even more engaged with the international participants. Today we have two distinguished panelists, Mr. Sahba Sobhani and Abdelilah Belatik. And the topic of our panel is invest on sustainable development goals, actually, especially after COVID-19. COVID-19 has affected all the economies. It first came up like a health crisis, but later on, it became more of an economic issue. It is kind of a structural break also from our regular lives, from our regular economy. And we don't know what's gonna be unfolding in the future. So there is a huge uncertainty about what the future is holding for us, for Islamic banks, for private sector that Mr. Sahba is more involved. So there are many uncertainties, and I'm sure among the audience, we have members, we have some audiences wondering about what the future will be holding for us. So I'm also wondering about your views. Mr. Sahba will be talking probably more from the private sector side. He has been involved in many activities. He has a prolific CV. He is one of the founders of Corporate Responsibility Center in Turkey, ESG Center, also in various countries. He involved in many reports at UNDP. Especially we wanted to have him here today because in recent years, in recent days or months, there is a much more emphasis on the government side. The states seem to be much more involved in the economies. And I wonder actually how the entrepreneurs, private sector will be acting in this era. So I will ask that question in a bit. But before that, Mr. Abdelilah, Dr. Abdelilah, is the General Secretary of CIBAFI. CIBAFI is also a very important institution because at ADFIMI, it's a development association of development finance institutions. CIBAFI is the association of Islamic finance, Islamic bank institutions. So most of the Islamic bank components have certain development objectives. I also wonder their views, how the Islamic banks will evolve. So I'm sure that this is also, you are curious about what they are going to be saying. But let me start with Mr. Sahba. Again, thank you very much for being with us today. Great to host you as a moderator. Let me start with what have you done in the last 2-3 months to adjust at UNDP? I guess you have been working at home as well, but I believe right now you are at the office, I guess. So how was it for you?
Yes, as you may know, UNDP has been leading the socio-economic response of the whole UN system. The World Health Organization has been leading the health response, and the Office of Humanitarian Affairs has been leading the humanitarian. In that context, though, UNDP has historically had a very strong health systems portfolio. We have around $2 billion portfolio of assistance to government around procurement for essential medicines, different sort of activities. In that context, I think like any international organizations, our first effort was to buttress these health systems, which meant we did around $100 million procurement of basically PPEs, et cetera, all these kinds of essential needs. Secondly, in many countries, there was a disruption in terms of government services. So UNDP has been supporting getting Zooms, getting digital, getting all kinds of digital capabilities quickly for governments, for parliaments to meet online, for government services. So the digitalization agenda, which we have been pushing for the last 2-3 years, UNDP has done the whole e-governance infrastructure of Bangladesh and a number of countries became quite important. And I think the third one is this is where you leverage technology from the private sector. You have health innovations, health technology from the private sector, you have basically technology enablers. Then I think the third area, which is also an area of our concern, is, historically UNDP, a lot of multilateral development banks have focused on the general private sector development, trade competitiveness sort of support. UNDP has focused on making markets work for the poor. That's why when we look at Islamic finance, we look at the intersection of Islamic banking and impact investing, looking at green sort of sukuks. So in that context, I think the biggest concern we have is since 1991, our reports have shown that we will go into poverty. Over 100 million people will go back into poverty. So looking at business approaches, there's been a number of innovative business approaches that engage the poor, let's say through telemedicine or other digital education, ensuring that this crisis, the gap between the poor and the rich is going to be significant and requires two types of intervention. One is government social protections. And secondly, we need to think about new business models, low-touch business models that enable the poor to be working in the economy. And I think the third thing is we need to think about the safety, health and safety of agricultural workers when they go back on the fields, people, informal entrepreneurs when they go back on the streets, employees that work in textile factories. So those are the things that we've been working on.
Thank you, Mr. Sahba. Especially on the part of impact investing, I guess we are coming to a new area. Dr. Abdelilah, how about on your side? Have you devised a short-term strategy after COVID-19? What were your initial reactions against COVID-19 epidemic, and what were the reactions of the Islamic banks?
Yeah, well, first of all, let me thank the organizers for inviting me for this session, and thank you for the moderation. I think, of course, this came, as if I can say, as a shock, really, to everyone, including, of course, Islamic banks and financial institutions. Going back a little bit to say, for example, last year, situation was good. Which is in some ways it was a sort of good start for us, because liquidity was available and capital requirements and so on were in good sufficiency, if we can say. So when this started, it was as all of a sudden, almost as everyone noted, the whole world stopped in some ways. So there was kind of adaptation time at the beginning, especially, I mean, you know, you can close enterprises or some cafes and so on, but people still need to go to the bank, still need the money and so on. So it was like some of considered as essential businesses which could not really close. So they could, they had to adapt in many of the countries. First of all, from the operational side, on making, you know, ATMs available full time. There was like kind of more stress on these areas and trying to see how work can be done in some cases remotely. So there were some different initiatives depending on countries. Some countries had like half of their staff working at certain periods, at certain weeks, and others working on other weeks, just to ensure, because you cannot do everything remotely, especially in banks. So certain things are possible, others are not. So this, if we can say really from the operational side, on a more like supporting the economy in general, there were a very intensive work and collaboration with regulators and I mean standard setters and central banks. So I think central banks took, to be frank, very active measures, and they were very quick also to respond. In many of the countries where we have members, in over 30 countries. So many of the countries, central banks, they had direct dialogues with banks and recommended to the banks to be more lenient with customers. To most of the countries, there were either recommendations or sometimes asking them really to postpone installments for the customers from 3 to 6 months. In some countries, there was a requirement to do it without charging any additional costs for the customers, any additional profits. So these measures were welcomed by the banks, because I mean it's the responsibility of Islamic banks also to contribute to the economy and to see how to make sure that the economy and the SMEs in particular do not face big challenges and do not collapse. In the same time, the regulators, I think, took also very positive measures for the banking sector in general. In, for example, in all the liquidity ratios and the capital buffers, there were some recommendations also from the Basel Committee on how to treat this. So this, if we can say, for example, for the short to medium term, like maybe for the 6 months ongoing, the quantification of the impact of the COVID-19 on the financial sector is kind of known more or less, because just some of the regulators, they were recommending that, for example, even if there are requests from customers to postpone payments, these would not be considered as default or would not change the risk category of this. So all these measures were very positive and they were welcomed, which will allow the customers on one hand to, to deal with this sudden situation, and in the same time for the banks to stay afloat and not to have any significant problems. So of course, the bigger challenges that we'll be seeing now is what after, really, like from 6 months, 9 months, and the significant or probably the important changes, the structural changes that may happen to the economy. But I suppose we'll talk a little bit more about it later.
Let me pick up from there. Actually, you mentioned about the central banks. I agree. I mean, central banks have done a lot, not just in developed countries, but also in developing countries. About the central banks, I agree. I mean, central banks have done a lot, not just in developed countries, but also in developing countries. Many of them have lowered down their interest rates. They had expansionary monetary policies. Even in developed countries, they start buying equities of the private companies. So these are big boosts for the economies. Let me come back to Mr. Sahba. how do you see that this central bank involvement in the economy would be, is it a new normal, and how is it going to affect the private sector? Because we see some central banks also start giving more incentives to the private sector because we have a concern about unemployment, growth structure. How is your take on the central bank policies? Dr. Abdelilah has mentioned about the short-term policy responses, and I believe they are all well done. But what will be the medium to long-term central bank policies? Do you think that they will be more involved in supporting the private sector through allocating certain funds for infrastructure, for development, or probably for investing?
I mean, we have to also remember we're dealing in a world where the fiscal space for many of these countries is getting limited. So there's that condition, that sort of global system condition that we have to take into account. I'll specifically speak about from the business model private sector. What is important from us that we don't lock in through these intervention into economic technological systems, let's say fossil fuels, other sort of thing that keeps us on the wrong trajectory to achieve the SDGs. Our administrator has said that the SDGs is the risk map of the world. For the last, UNDP is also one of the biggest players around biodiversity and forests. And we've been saying, do not cut forests because, you know, it creates all zoonotics. You end up with, you know, transmission of animals to humans. We saw that in Ebola. We also have climate risk. So UNDP is doing a lot of work on risks and the interplay of risk. So from a perspective of government decision-making, it is important that these instruments are used also to enable two things: a transition towards a green economy. It's important because in 2 years' time, you will see, let's say, a combination of floods. I mean, I was talking to the Bahamas. They had floods. Now they have pandemics. It's completely, their tourism industry is in a very difficult situation. And then the second one is we need to bring the S in the ESG, you know? You see countries like France that are launching social bonds that are, I mean, they have a bit of the fiscal space, but they're looking at launching different kinds of financial products that really focus on the social side. This is where I think Islamic finance can also play a role because there's been an overemphasis in terms of the green side. Yes.
Thank you, Mr. Sahba. Actually, may I follow with you again? I'm wondering about the low interest rate environment for the development projects and even for the sustainable development goals. The interest rates are so low that the investors might want to look at the other properties of the loans that they distribute. Do you think that it's a good environment for sustainable finance, for impact investing? Because apparently most of the developed countries stuck with the zero lower bound or around that number. So there seems to be not much of a return for their investments. But do you think that they will start looking more onto the other properties like sustainable finance?
I think you also have to look at all the barriers in terms of the domestic market. I mean, you have I think what should really be highlighted here is the importance of boosting local domestic markets, providing different ways of, you know, I mean, that should be the role of the multilateral development banks to enable some of these wholesale and financial intermediary players to enable those markets, but also mobilize more of the resources. Because end of the day, in a lot of countries, you see a flood of outgrowth. I mean, in Africa, where I grew up, in many of these countries, a lot of these local pension funds and others are investing in government treasuries, or they're just putting, the locals are just putting money in the local banks. And yes, I do think there might be a bit an opportunity to really identify these sort of local sources of finance. In terms of international finance outflows, I mean, I think there's a lot of questions. I mean, you see what's happening with the rating agency, MSCI. I don't know what's going to happen. So let's see.
Yeah, there are many things uncertain for sure. Let me come back to Dr. Abdelilah. Dr. Abdelilah, what do you think about this low interest rate environments for the Islamic banks? it seems to be the new normal of the central banks. Even after 2008 crisis, we actually discussed this new normal issues, but apparently the new normal seems to be prolonged, and we have again another recurrent discussion about the new normal of COVID-19. What is your view on the long-term impact of the central banks under low interest rate environment, especially for the Islamic banks, especially for your members?
Yeah, well, I think this is an interesting question. And I think as was mentioned, in general, what we have seen is that, and I think this will be kind of treated differently between different countries, especially those that are developed countries and those that are in development, like especially emerging economies. So when we look at all the stimulus that was done recently, and that some of the banks, central banks, have decided to pursue, governments have these two options, the fiscal and monetary policies. But monetary policies for many of these advanced countries, at least, like as we said, rates are so low that it cannot be even lower. When we see in Europe, the ECB or the US or the UK, so it's like almost zero or negative in some instances. So the monetary policy will be very limited to act on it. On the fiscal side, perhaps these developed economies, they can have a little bit more options, but many of especially if we can say the OIC countries or like these more African, North Africa and so on, it's kind of much more complicated. So talking really in general about it from the Islamic Banks perspective, what we are looking at is perhaps I think on this, some of the measures that you mentioned on, is it like sustainable, how to make like with these rates, these very low rates sustainable. I think there is a room of collaboration when we talk about Islamic banks and financial institutions. We cannot we cannot see, of course, all banks, they need to have some margins, some profits to run their operations. But there are ways, if we look at the overall picture in the Islamic economy, for example, collaboration between zakat and waqf institutions. And there were some instances, there are some cases actually where through collaboration between waqf institutions and the private sector, it was possible for the customers to pay very low or no profit rates, for instance, and still for the banks to have like some margin to make up their operations. So, outside of the Islamic side, there are perhaps other ways, and this is perhaps where the multilateral development institutions, they come to play, because as I think it was recently said in a meeting of the multilateral development financial institutions, that they are not necessarily for profit making, but they can support or they can collaborate with some of the institutions. And there are examples, for instance, as well, between even like some funds of the World Bank and Islamic banks to guarantee certain portions for the SME financing and so on, which will allow the banks to perhaps grant more financing for the real economy. So I would say really the advantage of the Islamic banks is perhaps it's a re-linkage with the economy, and there are some various ways of doing financing through equity or perhaps through other collaborations. But of course, it raises in the same time many other challenges.
Dr. Abdelilah, thank you very much. Actually, this is also what we found in one of our papers. Islamic banks seem to be closer to SMEs, and they, because of the nature of their operations, they have to be much more engaged with the real sector. And because of their size also, they generally engage with this small and medium enterprises. In that sense, actually, one of our findings in our empirical paper, if you want to boost the economy, probably Islamic banks might be a good channel because their transmission channel seem to be working better than the conventional banks. So it is good to have such a diversity. That's why that is also one of our conclusions in the banking sector, because you may need to use them. That is probably even will be more important right now, because when the COVID-19 crisis has first started, it was mostly on health-related issues. We said health is first, and then we didn't think too much about the economic consequences at the beginning. It was even at the beginning, it was more of a discussion about the supply chain management and so on, but many of the people, including myself, were not thinking that the crisis will be that big. But right now, economic impact of the COVID-19 epidemic seems to be much more overwhelming, and that could be lasting for certain time. And I believe the major issues seem to be more of an unemployment, because many people lost their jobs, or even they haven't lost their job, but in terms of their future prospect of income, they are more concerned. They have more doubts about their future income. Let me come back to Mr. Sahba. What do you think about unemployment issue, especially youth unemployment? In many countries, especially in developing countries, the youth unemployment was already big. I mean, the ratio was huge anyway for many countries, and this COVID-19 will be exaggerating this issue.
Sure.
What do you think that we can do about unemployment?
I think it's important to realize that we're dealing with a much deeper situation where the fabric of global trade and all of the sort of unspoken agreements are really fraying at the seam. You are having, rather than coordinated action, you have basically different actors, different governments putting different trade restriction, local shutdowns. So the health crisis is really, I mean, look at even Europe. This week, they're trying to figure out if they can coordinate travel within Europe for tourism. And it can totally unravel if they don't have the same system of identity for health, checkup. So this is something you really need to be concerned, because for two reasons. If you are a CEO of a multinational sitting, I mean, how do you plan for this? It is a very different kind of risk planning that you have to think about scenario. It's almost like you got to be like a general in a war. In the US, we talk about the basically situational awareness. You really have to figure out what you do. And then when you have soldiers in the field, you give them delegated authority to figure out what they have to do on the battlefield. So it's going to be very tough for the business. But I think this is where the role of multilateral agencies comes very strongly. I mean, we have so many CEOs of multinationals who are coming to the UN and say, we want to work together because we believe in globalization, we believe in trade. We don't need your money, but our engagement isn't around financing, but really understanding what's happening. And more importantly, we need to come together as businesses, not just individuals. If you look at a lot of businesses, they say, oh, I understand my whole supply chain. I don't know what's going on. I just do business continuity plan. This requires collaboration between businesses. And we've had business platforms across the world that are doing that, even in Turkey, 50,000 companies. So we have to think about that. The second part, as it relates to this issue of unemployment, is unfortunately, the COVID-19 situation is going to accelerate automation significantly. I mean, we're basically, some of these trends we were talking about, skills for the future, automation is going to accelerate. So they will see two parts. I think where you have emerging markets where the youth and everybody is very much in part of the global supply chains, in Bangladesh, in India, in the ICT sector, you'll see a situation where a lot of these jobs might actually become nearshored back, or use robots, and there might be a subset of winners. You might be, I was on a call this morning with Intel at 7 a.m. and we're working closely, digital AI skills for the future. So you might see some of that. The other part is that if you're a poor farmer in let's say in Africa, you might not be affected because you're dealing with local markets, So we have to figure out what we do with those youth who are in those kinds of market and condition. And one interesting thing that I've noticed is COVID has provided some level of protectionist, quasi-protectionist policies for African countries. Like, it's difficult to import. Cargo space is so precious. So it might be also give the opportunity, like in the ag sector, those companies that are fully integrated, like farm to fork, they own like edible oil, like in Congo, in Uganda, though they're actually going to do better. Before, they had these big competitions coming in with cheap imports from Asia, but cargo space is so it's going to be a very mixed sort of set of scenarios. Definitely, I think the social impact, preparing youth for the future, is going to be important. But perhaps this is an opportunity also to enable youth, let's say, to go into agriculture and some of these things, but with a little more tech, you know, in Africa and other countries.
Thank you, Mr. Sokpa. So let me come to Dr. Abdelilah, because recently they made a public press release of a survey done among the members. Would you like to share some results of those surveys, because they have some implications for COVID, what will happen after COVID-19, I guess?
Sure. Thanks for this. Well, actually, the survey was done before the pandemic started, but it's an annual survey where we ask the banks about their perceptions on the risks, on their confidence on the markets, and what they see of the overall results will be for the next 1-3 years, and overall challenges. But with a thematic point, which is financial technologies this year, and customer relationships, which actually was really timely, because we saw after this COVID-19 that many of the banks, those that did not start, they had to accelerate the technological offers, like the digital banking services. Some of them, they had really to rush in the few months when this started to make things a little bit more available, and to diversify what they're offering, their digital offering, if we can say. So the theme of this was this. So overall, what we see, I mean, this COVID-19, of course, has, as we said, there are immediate impacts, but there are probably more permanent impact to the global economy and the way we live. Actually, if a few months before you would not have this kind of webinar, there was very limited, while now we can see them becomes part of the routine and part of the work. Working remotely, the same. So this has been very, very limited, and now becoming prominent in many organizations. But I think situations like this, they bring also, they have challenges, but they bring opportunities. So even though with the economic situation, there are some companies, those that, for example, work on remote work, or those that deliver services and so on, they did very well even during this crisis. So for example, for the banks, what we see, this accelerated a little bit, and it will have to accelerate a little bit more on the digitalization. So to make the financial services more digital, and to be closer to the customer. So the topic of this year's survey was this. So what we have seen is that, of course, for the last couple of years, this has been like a trending point, of course, on financial technologies and fintech. There has been already some starting for it and so on. But there is we are in the period of transformation right now. So we think that this probably, events like this will accelerate this change in good, in some other negative impacts, perhaps. I mean, on employment, it depends. I would not say it will have really a negative impact on employment. Perhaps there will be less people facing the customer, or less in the branches, but there will be more on the technological side and more on analyzing data and so on. So it has both implications, if we can say. But in general, the perception of Islamic Bank, they continue to be doing well. alhamdulillah. So this is very good point. But due to this uncertainties now, we wait, but we are kind of impacted in similar way as conventional banks so far. But we tend to see, but one of the points, mitigating point, I agree with Mr. Sahba on this, and we engaged already on this, is that there are really no kind of like one-fits-all solution. So what we have recommended the banks in different countries to have sectoral discussions between the banks as bodies in those countries and between the associations or the sectors per se. Because, for example, if we look at the hospitality sector, is very badly impacted in many of these countries. And some of the countries where we have banks, they have like maybe 10 or 15% or 20% of GDP depends on tourism and so on. So it's very, very huge impact. Some others perhaps less impacted. But so in this case, we cannot have like one solution to be spread all over, but we recommended, and I think banks are engaging in dialogue with specific sectors to come up with solutions, of course, in compliance and conformity with our rules and principles.
Thank you. Just to give you an example on this, our UNDP Turkey office did a survey with a business community with 1,000 businesses, and this is a no-brainer, but it's 80% down, and in Antalya, on the border with Iran, that's with the tourism, and border with Iran, the traders, and there was some local manufacturing happening there. It's also 80–90% down, right? Last month. Interestingly, unemployment didn't go down as much because of all the sort of incentives, the short-term incentives. But it was also very clear that the SMEs cannot do this kind of digital from work sort of a system. But on the border with Iran and Iraq, they need to find safe ways to reopen trade, right? And they can address that issue. The issue with Antalya and others, I mean, I have a document from Toshiba, low-touch economy. You basically we're going to have 3 scenarios. One where basically goes down, in terms of just the pandemic. If you're looking at the one that we cannot address it, and it's only when the vaccine comes, you need to abandon market within 3 years. Like, you have to mothball, you have to figure out what you're about to do tourism, you need to figure out what you're going to do. I mean, in Turkey, it's not as much an issue, but in certain countries that are fully dependent on tourism, where travel is very restricted, you don't have domestic markets, then you really need to think about, what kind of decisions. I think this is a discussion, like Dr. Abdullah said, between the banks and the sort of sectoral. But it's important. I will really bring back this point about the risk and the multiplicity of risk. We will have this interface of climate. I mean, I give you one example. In the Bahamas, when I was involved in the earthquake, you had, because every hedge fund manager in the US is there. In one day, they had 591 private planes in September, cargo coming in with everything. The amount of commitment for public-private partnerships to rebuild the hospitality sector was so strong. But then they didn't think about the pandemic risk. So all these plans are on hold. So we from the UN have been talking about for many years, these are going to be risks that's going to affect your bottom line. So you need to look at the interplay of the risks.
Yeah.
Thank you.
Thank you, Mr. Sahba. Actually, you raised the issue of global coordination. That is also my feeling. After the 2008 crisis, it was also a big crisis. It was kind of compared with the Great Depression of 1920s, 30s. But it turned out to be that after 2008 crisis, thanks to the central bank, and even more importantly, thanks to the global coordination, just after 2008, for example, G20 became more popular. It started to be gathered at the level of presidents, not at the level of finance ministers. So there seemed to be much more global coordination. Do you think that we should have the similar global coordination after COVID-19 or during the COVID-19? Because we don't see such a coordination right now. The global leaders seem to be in fight. I mean, the trade wars between China and US. It seems to be that countries are taking advantage of this COVID-19 crisis to bring out the old issues, old matters, instead of cooperating. What is your take? I mean, without global coordination, how is it going to affect the unfolding of this crisis, and especially from the private sector point of view, because oftentimes the governments lead and the private sector follow. Do you think that the private sector engagement will be affected? I guess you are muted, Mr. Sahba.
I think the most important thing is this divide between those that are going to be the most affected countries, you know, who don't have the fiscal space. There's indebtedness, who will not be able to respond in the same fashion as some of the richer countries. IMF, actually, today we have a whole event. The UN is really working very closely with IMF on these issues to really push this agenda. And of course, member states have their voice and really are part of the decision makers, but the IMF is very much on board on the agenda of the UN in terms of ensuring that this we deploy the kinds of right set of instruments that don't set us back, I think, from the SDG side. I think the coordination in 2008 was around fiscal instruments, financial instruments, monetary instruments. This one's a bit more complicated because you also have health decisions that are driving, or health ministries that are driving these decisions. So that brings another layer of coordination. So I think that if you go back to my analogy of the risk, we need a much more integrated perspective. If we have that integrated perspective, then we can figure out what is the set of coordination that we need to go. Because fundamentally, it's not like I'm working natural disaster. You haven't had a natural disaster or a man-made war that has created a significant sort of shock to the system. You have a health shock system. You have a coordination failure. These are things that if you can, I don't think we can go back necessarily to a trajectory that might be an optimal trajectory, but at least one that could be mitigated as much as possible. In order to do that, yes, we do need coordination between actors, but it's not just between central banks, and we need to bring some of the other players.
Yeah. What do you think about the private sector integration?
So I think, so the part about the private sector, there are two roles. I mean, we work with business association across the world. We work with the ICC. And what we've been saying is that this was a health, they've been saying also, this has been a health thing that has negatively impacted without our consultation in some fashion, right? So we need to, and there's going to be all these stimulus of money coming in. We need to make sure the SMEs, the money ends up to support the right kinds of private sector and the right kinds of, affected communities, right? So I think business coalition need to sit at the table in their countries as this exit from the pandemic is being discussed, as these fiscal stimulus is being discussed, to ensure, especially the ones that are not part of to ensure that the decisions, I mean, as you said, what are we going to do you're in a country like Bahamas, what are you going to do about the tourism industry? I mean, what is going to happen, How can we plan for it? What are the fiscal incentives? Maybe the best thing to do is X or Y, or we need to buttress our digital infrastructure. The whole world needs, this is the opportunity. You bring your telecom, you bring your basically mobile banking players, the banks, the internet providers. So it requires this kind of solution-based approach. And then you align the different the right kind of incentive. Because some of them incentives, for example, in some of the countries, just giving cash transfers to the most affected population makes a bigger difference, even for the business community, than let's say you give me a loan so that I keep my, zero loan, so I keep my employees,
Yeah. Especially the direct transfers will be having some distributional effects. So let me come to Islamic banks in here. Apparently, the impact investing, sustainable finance, these issues were important anyway. And I know that at CIBAFI, Dr. Abdelilah is closely following. And as far as I remember, you were going to organize an event in March, I guess, in Istanbul, but it has been canceled because of COVID-19. It is good to see that Islamic banks are following those issues on sustainable finance, impact investing. What particular role do you think that Islamic banks can play in impact investing and sustainable finance? Because if we remember, after 2008 crisis, there was a big interest in Islamic banks because they seem to have been affected less from the global crisis, and there's a huge interest, and still that interest goes on. But especially at the beginning, many people wanted to learn about how the Islamic banks are running. And given that Islamic banks are supposed to be more involved in the real sector, this impact investing, sustainable finance issues should be in their agenda, and I know it is in their agenda. Could you give some insights from the sector about what will be happening with impact investing in Islamic banks?
Yes, sure. Well, I actually, to be frank, for the last few years, we have been engaging with Islamic banks to see how we can do more on this. If we look at the principles and rules, Islamic banking is and finance in general has in its DNA this sustainability principles in general, and sustainable development goals. They match exactly in the objectives of Islamic finance. The fundamental objectives and basis of Islamic finance. But perhaps one of the issues, and I can say it does not pertain to Islamic banks only, but more global. There were, I can say, two things. First of all, is that the focus of the UN, and we have the colleague here, perhaps can confirm or not. The focus at the beginning on sustainable development goals, and this is, when we talk to the Islamic banks on this, when we used to talk the last 2-3 years to raise more awareness on this, there was like a perception that many say this is government problem. So all these actions are kind of the responsibility of governments in their different countries. But until I think maybe the last 1 or 2 years that there was more interest from the UN itself and outreach of the Secretary General to the private sector and to see what the private sector can be doing. And that's actually where we realized, because of the financing gap of the SDGs. So we start pressing more on this on the agenda for the Islamic banks. But what we realized, and I think the topic of our last year survey was specifically on this, on sustainable development goals and the role of Islamic finance on it. And we had our first, there was also in collaboration with the UN office from Istanbul and from the colleagues here in Bahrain, our friend Amin Sharqawi, where we asked the banks about how they see sustainability or sustainable development goals and Sharia objectives, like the foundations of Islamic finance. And there was a very strong correlation between the two, or the perception. So they say it is within their objectives. But when we ask about how this is implemented in practice, we found there is a lack of understanding and perhaps not a systematic way of doing it. So that's why we engaged and we established a sustainability working group where we will be working on 2 aspects, one on sustainability and to see how in practice this can be done, how the banks actually, they should be doing it, how to direct this funding and financing to this different sectors, even though they are important for them. So we know they're important, but we need to give them some guidance on how to do it. And the second area is on the climate change. It's a similar issue. If we ask the banks to see how to promote like the environment points, but then many they will ask how can we do it? Some of the banks, they were saying, yes, we are reducing our air condition, we are reducing the paper waste and so on. But we say this is not really the only problem. So it's really on the funding portfolio, on financing portfolio, that this can be done. And for this purpose, we have engaged in one project, which is having a measurement methodology for the carbon footprints of investment portfolio of Islamic banks, this which does not exist. So we aim as providing some guidance to the banks on how, first of all, they can encourage sustainability and sustainable development goals and the climate change action as well.
Thank you, Dr. Abdelilah.
And we actually have at UNDP, we have an initiative, global initiative we launched called SDG Impact. It's with a number of the standard setting boards and basically with the impact management project. And the idea is to look at the portfolio, to work with you know, the investors and others to look at their portfolio investment and see how much is ESG, how much is do no harm, how much is actually really impact oriented, you know, and figure out, and it has that sort of, and we're going to provide some kind of, the standards just came out, standard for bonds, standard for private equity, standards for different kinds of mechanism. And it also has another element around market intelligence at a country level to see what are the SDG enabled opportunities, you know, what are the kinds of activity. And just one final point where you say, I think people say, okay, I believe in SDGs, but how? And what's the business case? I mean, we did a survey about 2 years ago with the business community. At that time, they said water, for example, was the business case was very clear. Reduce your water intake, you know, but like inequality, the goals related to inequality. So that was like 70% said we can do something about water through our whole corporate or energy efficiency. But inequality was, so that was 65% of top 1,000, but inequality was like 15%, you know, or poverty. That was like the least chosen. But to be fair, it's not just a business issue, it's a society issue. You need governments to do something. You know, we have to be very clear what is within the footprint of decision-making of the financial actor, of the business actor, and what is the rest of the ecosystem has to do.
Actually, this is, the results are more reliable because we cannot change the inequality over time. It's a more long-term thing. So actually, the business people probably know where to start, but over time, it is expected that all those SDG-related activities will help to reduce inequality. Actually, I was going to ask the question of, after COVID-19, do you see that we need to change some priorities in SDGs? I know SDG impact has done a lot. Private sector involved in SDG as compared to Millennium Development Goals. It is a great success story to see private sector, education institutions, not just the government, but other actors seem to be much more involved in the SDGs, and definitely private sector is one of them. But do you see that after COVID-19, probably some of the issues in SDGs will be gaining more momentum, more priority, Mr. Sahba?
So I think that, you know, for the last couple of years, we've been giving people carrots and saying you should do the SDGs because it's good for society. But at the same time, let's say our minister had been saying the SDGs is a risk map for the world. You see all of these goals, if they're not met, if we don't deal with biodiversity, etc., it will impact. Now, when we had Ebola, for example, where basically you had, because of human and animal interaction, you had a localized impact in a couple countries. It didn't affect global supply chains. So I think the most fundamental issue is people to understand risk. What is the nature of risk? What is the interplay of different kind of risk? These environmental and social risks are going to affect your bottom line. We just looked at a study that looked at the cost of capital for all kinds of bond issuance and corporate bond issuance in 80,000 in countries that are very vulnerable in strength. You see that it is increasing. In the insurance sector, you see that they're increasingly quietly, you know, not willing increasing the rate. So I think this is important to look at the SDG and flip it if you're from the financial community and really look at seriously these three issues. How do you define risk? How do you integrate that risk? How do you look at the multiplicity, and then you make your decisions around that.
Thank you, Mr. Sahba. So let me come back to Dr. Abdelilah. Dr. Abdelilah, you are there? Okay, you are there. Dr. Abdelilah, ADFIMI is a Association of Development Finance Institutions in Islamic countries. And many of the members probably overlapping between ADFIMI and CIBAFI. Do you think that Islamic banks can play a role in development finance? Because we mentioned that the Islamic banks are distributing more to SMEs. But after COVID-19 issue, there is all sorts of impact investment related issues like development financing, financing to reduce unemployment, not just for SMEs, but overall. do you think that Islamic finance institutions, Islamic banks, can play more role in developing development financing? Do you see any role that attributed?
Yes, for sure. Well, I think talking about this, and actually we have some of the common members that are members of CIBAFI and are also members of ADFIMI, and they are like Islamic banks, not per se the type of development institutions when we mean multilateral. So they are private sector, but their purpose, as we said, of the Islamic banks, and actually during the survey that we did, so the prominent point that came first was on, first of all, on the economic development. So the contribution to the economic development. There were other points depending on the regions as well, which is health and education. And we see now, I think this trend will be certainly accelerated because of this the COVID-19 situation, which showed the importance of the health sector as well as the education, when we see there is like the investment on research that is needed, the huge things that need for the support for the universities and professional development in general. One area also that perhaps can be considered is on the sukuk, or what we say like the green sukuk, or impact financing sukuk, and so on. So this is an area that perhaps can contribute. We see it probably as having, of course, the Islamic banks, of course, they have this SME, as we said, but it's not only that. So there are other areas. And if we look at the other sectors also, for instance, the Waqf, which is a huge opportunity, underutilized opportunity, having a collaboration between the two, and even the zakat sector. So you mentioned just a little bit before with Mr. Sahba on the global action and so on, and coordination. At the private sector, I think in cases can be more proactive in response. I can tell you in the first few weeks of March and April, beginning of April, we had already a special executive committee meeting of CIBAFI members discussing this issue and see kind of fine-tuning or tuning the response and discussing what actions are being done in each of the banks and so on, and how they can learn from each other. So I think this is something which is very important. A closer collaboration with the regulators in the different countries is also very important. But I think working closely for Islamic banks to have perhaps a greater impact and to be doing more is to have a collaboration, including with multilateral organizations. I think from our side, realizing that the questions of climate change and sustainability are very important, and of course, I mean, we may need support and a better understanding. We engaged with the UN and UNDP office in Turkey and in others from the US, and with the UNDP on environment protection. We engaged with them in some discussions to explain what really can be done, and we had a first a roundtable knowledge sharing session here in Bahrain, where we had, I think, over maybe close to 20 different organizations from the UN system coming with Islamic banks, with CIBAFI, and talking together to discuss, to see what Islamic banks can do and perhaps how they can do it, sharing some best practices and experiences. So I think there is really a room to do. There is already something which is done, but we think that's probably not enough. I mean, the potential for doing more is great, but we will need, first of all, awareness on this and how we can do it, and then maybe some support and sharing best practices.
Thank you very much. Mr. Sahba, I know that you are not just writing reports. These are not just general principles of SDGs or environment governance issues. You also implement certain projects. Could you give us some examples that could be even more implementable after COVID-19? Because you mentioned that you are going to emphasize, the UNDP might emphasize more touchless projects for the youth, for example. This sort of practical examples might be good for for ADFIMI organizations or for Islamic institutions. Could you share some of them?
Absolutely. So we've been working on private sector-led skills development, for example. And the traditional sort of skills development has been, you know, government vocational training from the, and then basically that they work with the private. We looked at the experience in Bursa with the business community there in the manufacturing of auto, where they've come together. They've invested in an initiative where, not for basic skills, but if you're working transition, rather than having their individual skills program, they will pool the resources for folks to go and get upgraded of skills. And there's similar examples in India where the government has been investing equity into skills development enterprises. In that context, of course, the future of skills is an important component of this. And what we've been doing is we've had in the last 2 years work, let's say, with HP, IBM, and others. Like HP has a whole thing called HP for Life, which is available online, but basically has all of these different course modules for digitization of small and medium enterprises to learn how to do sales, e-commerce sales. Now you have WhatsApp business, all these different things. Now, of course, with COVID, this is becoming a very important area of work because in many countries, even small shop owners need to do digitize, you know. So we have all these course modules to teach you from informal enterprises, let's say, how to use WhatsApp business, to medium-sized enterprises to think about what a digital transformation would look like with global partners. I had a call this morning with Intel. So we have a collaboration with a lot of these large-scale players. The other area I mentioned is disaster. We work on natural disasters. In many countries, we work with business associations to come together to respond to disasters. In Philippines, for example, they have so much typhoons that they have their own emergency operations center that works for the government that goes back and rebuild. This is part of the core business. But what's interesting, they share data to each other to understand, okay, this is the impact on my place, this is the impact on. So one of the things I want, you know, Turkey is a very interesting country because you have earthquakes, you have, you know, a set of these natural disasters, but you have also very strong supply chains. So I think it's important that there's a next generation of products that are earthquake resilient, flood resilient, all of these things. Now we have COVID, right? That look at low touch economies. So using the risks as an opportunity to create the next generation of products is going to be. I give you one example. 2003, people don't realize that's when Alibaba, all of the major Chinese superstars in the tech e-commerce sector came out of the SARS experience. That's when China actually had the first generation of new startups. So I think COVID will provide the same kind of opportunities. You know, UV light. There's going to be a whole set of new things that will need to come out.
Thank you, Mr. Sahba. Let me come to the questions from the participants at the YouTube channel and at the Zoom. Mr. Sahba, you talk about the risks and to model to internalize those risks. But for COVID-19, the risk is more of an aggregate shock. I am rewording the question somewhat. For this sort of risks, how can we be ready for that? Because even the governments seem to be not ready.
Yes.
The intensive care units were not there. There were many health issues in developed countries. I mean,
yes.
I'm not even talking about the developing countries. It is quite difficult to get ready for such a big macro aggregate shock. What can we do as private?
So I mean, it's like I will use the example of our natural disasters. When there's typhoons, there's everything coming. You need a nerve center between all the private sector, and then you need a nerve center with the civil and the military, and they have to talk to each other because it's about situational awareness. You might shut down. I mean, look at Germany. All of a sudden, a subsection got shut down, you know, because of the health. They had to increase. There's a macro situation, but you need that information flow between the different actors, because otherwise, I mean, there's going to be a lot of situated, and you need a similar system. And global, if you look at, there's a McKinsey report that has all these elements in terms of how you set up such nerve centers, how you deal, because in a situation of a lot of unknown unknowns, known unknowns, you know, that is the way you'll be able, you can't start a trajectory and then I give you one example. Everyone said you need to have ventilators, right? I mean, it's a health example, but then we realize ventilators, if you get on it, you might die. So you need to, if you start, I mean, you still need ventilator for other purposes, so you can make a decision, but you're gonna need, I think the most critical issue right now is trade intelligence, understanding what is happening between different countries. You know, it's going to be very critical. I mean, here in Turkey, we're waiting, those who live, to hear what is going to be the restrictions for the flow of tourists into this country. That will have in the next 10 days, will have a massive impact in terms of a whole set of localized businesses in a number of different areas. Of course, I know in Turkey that information flow is happening. There, you know, you have a whole infrastructure to deal with that. But imagine if you're in a small island country in Mauritius, you don't have that negotiating power. So so there's a role also for multilateral development banks and others, and other institutions to play that role too.
Yeah, I guess this question of even sharing the information is kind of requires global coordination. Apparently, yes, countries do not trust the data of other countries. Probably we might have started the hospitality sector much faster if the countries cooperate more. But apparently there is lack of coordination at the global level. And I believe in order to mitigate those risks, the government's international community, I mean, international organizations might play more role. But definitely this sort of private market solutions are also needed, I believe.
So I think information flow between businesses makes sense. I'm on some WhatsApp group where you have 100 business people, business association leader from across the world. And I'm amazed how fast they can flow in the information between themselves. So we need more of that, you know, because they're affected.
And also you mentioned about the risks, but most of the risks also comes from the uncertainty, because
yes,
this is the crisis that nobody knew before. I mean, we have similar ones 100 years ago or at the beginning of 2000s and so on, but still it is an unknown sort of crisis. And the more information governments share, the private sector share, trade people, finance people share, it will be solved much faster, and that uncertainty will decline while the risks will be mitigated as well.
I mean, on the positive side, demand, for example, for food production and all these things is not going down. You know, it's not like a man-made disaster where you had a massive shock in terms of your assets and all these different things. So, I mean, look at Europe right now. The question I have in the next 2 months, they have are they going to harvest everything they have? If not, are other people going to fill in? Because their question right now is, can we get migrant workers within the EU to go do the harvest? That has implication. If you're sitting in Turkey, you would wonder, maybe should I continue, you know, my arable land or not? Those are decisions you have to make. You're in Kenya, you can't export flowers. Cargo space is so precious, but at the same time, the Chinese are not importing. There's a lot of these kinds of decisions that a lot of these businesses and governments have to make.
Yeah. So that's why it is better to reduce the uncertainties as soon as possible. Uncertainties within our hands. Otherwise, if it gets longer, it will be even more chaotic. There is one question by Abdul Magudio Savadogo. It is about Africa to Dr. Abdelilah. This question comes to you. We see that, I'm reading the question, we see that Black Africa is very underdeveloped in terms of Islamic finance and in development of Islamic products. This COVID-19 can be an occasion so that the states can be interested. Do you think that COVID-19 could be an opportunity for the development of Islamic finance in Africa? That is the rephrasing of the question.
Well, I think the opportunity for Africa is huge regardless of the COVID-19 or no. Perhaps the COVID-19 will bring a little bit more openness to diversifying the financing and funding options, in bringing perhaps in the Islamic banks, but in general, what we have seen for the last few years already, and we think that's the, I mean, Islamic finance, as you know, has been here, the modern Islamic finance for maybe 45 years or so. And there has been a huge growth. But we saw like for maybe 5-10 years ago, the growth slowed a little bit. So it's still growing in many places. It used to be like 15, 18, 20% a year. Now it is about maybe 5 to 9%, 7%, 8%. But we see actually the potential of growth is greater, is huge in 2 regions globally, is in Central Asia and Africa. So in matured markets as like GCC and perhaps in Malaysia, Indonesia, and not Indonesia, Indonesia still has a high growth potential. So there is, it's like the growth is kind of steady, market is stable, but African region with Muslim population, the young people in need of funding is really a huge potential. The last maybe 2-3 years, we saw an increased interest from a number of countries, including in the West African countries, Senegal, Cote d'Ivoire, Burkina Faso, and so on. We had an engagement and agreement with BCAO, with Central Bank, like a training academy to bring in Islamic finance there, and we have a number of training modules that are delivered now by, I mean, in collaboration with them. We started 2 years ago, 1.5 years ago, and it is increasing. There is some kind of increased interest. We see it. I mean, it is now already existing in Nigeria, in Kenya, in South Africa, and others. In addition, of course, to North Africa, which is quite significant. So we think that there is a real growth potential, but what is needed is a regulatory framework. It is very important. Without that, it's very difficult to operate. There are some other perhaps challenges exist, but we agree. I think it's a good opportunity, and we hope that this will open up further the minds of governments and regulators to welcome Islamic finance in those countries.
By the way, it is good to talk about the opportunities. In the last 3-4 months, we all discuss about the COVID-19, how the economy will be affected, how the health sector is being affected. Mr. Sahba, there is one thing actually you mentioned about the opportunities after SARS came up. Alibaba become bigger after that, or Alibaba is a product of SARS?
All of them, all the major Chinese e-commerce and WeChat, all of them came out of that experience.
And similarly, right now, even we are conducting this webinar through Zoom, and we have done our lectures online. Many things, even the health services could be done online through telehealth services. Do you think that it could be a good potential for developing countries? Because we know that mobile phones are very much used in Africa, and we cannot reach certain parts of Africa or certain less developed countries. Do you think that it could be a good opportunity also to develop those products, and probably this will be affecting the
I'll give you one example. I have, my in-laws have a house in Congo, in Lubumbashi in the south. In the last 6 months, I have renovated the whole house through WhatsApp. Basically, connecting to a bunch of these young professionals. They did all the work every morning. They wake up. I use World Remit, which is a fintech company out of London owned by a Somali businessman, Somali UK businessman. The cost structure was like ridiculous, 2%, 1% for the transaction. They got the money immediately. The KYC was very high though. They had to take pictures of my ear, my face. They had a cognate, all these things, but the system is so impressive. So I did a whole house renovation. So let's not underestimate the power of entrepreneurship in these countries. I mean, in Africa, you have certain, let's say, Facebook pages of traders that has 100,000 members. So when they go across the floor. Now also you have the African Free Trade Zone that will enable, because it's important that inter-regional location. You have a young population, unlike some of the other ones, which has, will be more affected disproportionately by this pandemic. So it is an opportunity, I think, for leveraging technology, but also leveraging the human capital to enable, sort of the growth of Africa and some of these other regions.
Thank you, Mr. Sahba. We are coming to the end almost, just in last couple of minutes. Let me give the voice to Dr. Abdelilah. Do you see some opportunities for the Islamic banks? And also, in addition to that, what will be your recommendations to development finance institutions, to the members of ADFIMI, that they can follow a particular path after COVID-19? Because apparently development finance institutions might be even more important after COVID-19. The states seem to be much more involved in the economy. States are giving more funding, directed funding for development projects, especially to reduce unemployment. Actually, let's make this question to both of you. What will be the suggestions from your perspective to development finance institutions? Let's start with Dr. Abdelilah.
I think I would say really a key word is greater collaboration and collaboration between financial institutions, but I think probably on a local basis, a greater collaboration between development institutions and the other private sector and also the government. I think we should not really exclude the role of the government in these situations. These are exceptional situations, and government interventions in certain cases where there is kind of support or kind of guarantees and things like this might be very helpful, and I think it is very important to have. In collaboration, working with multilateral development institutions, it is very important. I think the opportunity side, there are for sure opportunities, perhaps now more than before, and I would say especially perhaps for the youth in terms of entrepreneurship, financing and technologies development. They are more open to this, and we see here and there actually some initiatives in different countries of the youth being a little bit more involvement in local development. The global supply chain is being thought again to see how this can be done, how we can buy our goods and services and so on. So there will be some permanent impact, but will be also on the good side, because it may bring some businesses back into the countries and local productions. And this will be for sure some opportunities for the local communities, and as mentioned, not only for the crisis that happened before or the SARS in China, but in general throughout history, pandemics and big crises, they brought huge opportunities and business changes in the economy.
From my perspective, I think we're in a unique time in history where we have to deal with health, environment, all these economic factors. So you need a whole of government and whole of society approach. I cannot think of a crisis where you need to have the Ministry of Finance, Ministry of Health, Ministry of Trade. Everybody actually has to come together in that fashion to collectively. Always been the health crisis or deal with the Ministry of Health. So this really presents a very unique opportunity. And I think those societies that bring this together, we also see it at the individual level. When we're considerate of others and we wear our masks, or we have to be forced to wear a mask because we're not considerate of others, but those societies that are able to think about the common good, and I think in the ethos of all religions, really thinking about the community, your individual actions affects the community, and the government, all the various elements of the government, those societies will be successful, and at the global level, we need that to happen.
Thank you very much. Thank you very much for your participation. It was great to learn from you. I believe the future will be on sustainable finance, impact investing, and we hear very good examples from various countries, some entrepreneurship events, some projects from Mr. Sahba, and we also see Islamic banks are doing a lot, and with the leadership of Dr. Abdelilah also, probably they will invest more on sustainable finance, impact investing. I guess it is also important to use the similar languages when we say many of the things that Islamic banks are doing are quite related with impact investing, with sustainable finance. So they might have a more global agenda by benefiting more from the sustainable development goals concept. I will give the floor to Mr. Fatih, but before that, if you have any last
Actually, I have to go on a call with the Pakistan Stock Exchange right now on a COVID presentation. Okay. So please go ahead. I can only be another 2 minutes.
Thank you. Thank you very much again. Dr. Abdelilah, would you like to say something before we end? Okay, thank you very much again, Dr. Abdelilah, Mr. Sahba. Hoping to see more of your projects, more of your success. There are some more questions, but we will have that opportunity in the other webinars, hopefully. So let me give the floor to Mr. Fatih for the closing remarks. Thank you very much.
Okay then. Thank you very much. Great thanks for our panelists, Mr. Sahba Sobhani from UNDP, Mr. Abdelilah Belatik from CIBAFI, and also special thanks for our moderator, Mr. Ahmet Aysan from Şehir University. We hope that was a fruitful meeting for you all. We will continue to organize such events like today. Therefore, your feedbacks are very significant for us. We would appreciate for your time if you complete the webinar survey, which we will send this week. Please stay safe and healthy. This is much more important than ever nowadays. Thanks for your participation. Thank you.